In a bold move that underscores the importance of ethical investment practices, State Treasurer Laura M. Montoya has taken a stand to protect public employees from the dangers of politicized investment strategies. She asserts, ignoring risks, whether related to governance, climate, or supply chains, is not neutrality, it's negligence. This statement encapsulates the core issue at hand, highlighting the critical need for responsible financial management in today's complex economic landscape. Recently, Treasurer Montoya, along with 16 other elected financial officials from across the state, reached out to 18 prominent asset management firms. Their letters, sent yesterday, call for these companies to reaffirm their dedication to responsible stewardship of financial assets. This initiative serves as a direct counter to the recent messaging from the State Financial Officers Foundation, SFOF, which advocates for a limited interpretation of fiduciary duty. The SFOF's stance encourages asset managers to divert their fiduciary practices away from established models that emphasize strong returns, accountability, and long-term risk management. Montoya is adamant that the people of New Mexico deserve asset managers who will resist political pressures and maintain an investment approach that is grounded in real-world risks and focused on long-term value, ultimately enhancing retirement security for public workers. We have a responsibility to shut down any attempts to redefine or diminish the true meaning of fiduciary duty, which means the duty to act in the best interests of what or whom is being represented, Montoya stated firmly. She emphasizes the need for asset managers to uphold their fiduciary responsibilities by steering clear of political agendas that conflict with sound investment principles, which could lead to unnecessary risks for investors. The letters also highlight the crucial role of asset managers in exercising their proxy voting rights and engaging with the companies in which they invest. This engagement is vital for safeguarding long-term, risk-adjusted financial returns. By expanding opportunities for investor participation, the letters advocate for greater transparency and accountability, thereby strengthening the connection between investment capital and corporate governance. In order to mitigate risk and maximize return, investors have a fundamental responsibility to engage with the companies they hold shares of, Montoya elaborated. It's imperative that asset managers continue to facilitate this role and preserve investors' authority to serve as accountable stewards of the companies they own. Among the 18 major asset managers addressed in the letters are well-known firms such as BlackRock, Vanguard, State Street, T. Rowe Price, and Fidelity Investments. The financial leaders have been asked to respond by September 1, 2025, and are encouraged to meet with Montoya's office to reaffirm their commitment to responsible stewardship and to foster a constructive dialogue on this pressing issue. But here's where it gets controversial. Are asset managers truly capable of separating their investment strategies from political influences? This question invites a deeper discussion about the balance between ethical responsibility and financial performance. What do you think? Should asset managers prioritize political neutrality, or is it acceptable for them to engage in political matters if it aligns with their investment strategies? We'd love to hear your thoughts in the comments.